And actually, just highlighting that one point, the traditional benchmarks out there, if what we're saying about disruptive innovation is correct, and these S curves are feeding one another so that these trends are accelerating, it probably means the amount of creative destruction out there is going to be pretty serious. And I think it will hit, again, the traditional world order, which today is represented by the broad based benchmarks.
How's it going, everyone? It's Sam. We just had a really interesting exchange between Elon Musk, Cathie Wood, and talking about the Buffett indicator. So, Elon Musk was asking Cathie Wood if the Buffett indicator was too high. Now, if you don't know about the Buffett indicator, this is basically what it is. It's the US stock market cap, divided by GDP. Now, this is at an all-time high. So, this was something that Buffett made. He said it was probably the best single measure of where valuations stand at a given moment. So this has been a flashing red light recently for people. It shows an overvalue of the stock market, right? Obviously, if stock market goes up, but if the gross domestic product doesn't go up, right, you're just becoming more and more highly valued compared to what we're actually producing. If GDP goes up a lot and the stock market goes down, that doesn't really make a lot of sense either. It's getting cheaper and cheaper in the market. The last quarter century, through the close of 2020, measured at year end, the median S&P 500 market cap to GDP, so the Buffett indicator, is 85.6%. Now, this ranges from 54% in 2008 because GDP was still, up there, but market cap of stocks dropped drastically, to the great financial crisis, which was the tech bubble, right? This was 131%. Things were overvalued. Right now, we've seen it jump from 122% in 2019, 147% in 2020, and now it's at 156% as of the last couple days. Now, again, Elon Musk asked Cathie Wood what she thought about this, does she think it's overvalued? And I'll show you that in a second. But before we get started, if you guys don't mind, there is a link down there to Webull. In case you want a really cool platform, you can deposit $100. You can get access to a platform like this. Helps out the channel a lot. Also, there is a link down there to the Patreon. If you want to know exactly when I buy and sell stocks, we got into MUDs today, and we're up over 6%. So just with what I invested, which wasn't a ton of money, you would have paid for 6 months of Patreon just on this one trade. So if you guys want to know when I buy and sell stocks and see kind of my opinion on the market and stuff like that, you can check out the link down below to Patreon. But let's get into it here and see what Cathie Wood and what Elon Musk said. Elon Musk said to Cathie Wood, "What do you think of the unusually high ratio of S&P 500 market cap to GDP?" So he's saying, okay, what do you think about the Buffett indicator? It's at like all-time highs, or really, really high numbers, he's basically saying. Cathie Wood says, GDP statistics evolved during the industrial age and do not seem to be keeping up with the digital age. Thanks to productivity, real GDP growth probably is higher and inflation lower than reported, suggesting that the quality of earnings has increased significantly. Now breaking that down a little bit. So she says, thanks to productivity, real GDP growth probably is higher and inflation lower than reported. So first of all, we need to know what real GDP growth is. Well, real GDP is an inflation-adjusted measurement of a country's economic output over the course of a year. So one way to think about this is GDP could go up year to year to year, but if inflation is going up the same amount, it's not really like we're getting any real GDP growth, right? So if this year we had $100 million worth of GDP and then inflation was 10%, and then next year we had $110 million worth of GDP, we haven't really grown. So the real GDP is about the same. So she's saying that thanks to productivity, real GDP growth is probably higher. So we're actually seeing real GDP go up more, and inflation lower than reported. So right now, a good explanation for this would be in inflationary periods, real GDP will be lower than nominal GDP. In deflationary periods, real GDP will be higher. So she's saying we're actually almost seeing like a deflationary period. Even though inflation is going up slightly, what she has said before is the fact that a lot of things are becoming less expensive. Like they talk about the convergence of all these different technologies, right? Becoming cheaper and cheaper, and how they think we're going to go through pretty much the roaring 20s. Like we're going to see so much growth. We're going to see so much innovation at one time. All these different technologies are going to converge and make things way cheaper. They talk about sequencing, being brought down to a very low number. They talk about drones, right? Where drones right now being manned by people, being manned would cost about $7 to deliver a package over 10 miles. If it becomes autonomous, it could drop down to a quarter, just 25 cents.
We can talk about how quickly costs are falling. So in the case of AI training, costs are dropping about 37% per year. When costs drop that quickly, really it unleashes a lot of creativity and problem solving that couldn't have taken place at any other time. And we're seeing AI models growing tenfold per year.
So she's saying real GDP growth is probably going to be higher. Inflation is lower because we're actually seeing a massive amount of technology that just isn't being really taken into account. So we are going to have a higher quality of earnings over the coming years. Now, this is just my take on it. I'm no macroeconomist or anything like that, but I think what she's saying is pretty right on track with what she's been saying over the last year, that we're going to have massive growth. And I was listening to an hour-long presentation by Cathie Wood, or maybe it was 40 minutes yesterday, and it almost felt like it was on repeat, like it was an old video, because she's saying the same stuff that she's been saying for a year now, which is there's going to be a convergence between all these different technologies. Like I said, it's going to create one of the largest booms that we've ever seen. There's going to be so much technology that we're not even going to be able to really comprehend how much new technology there is. And she says too that this is going to be very different than 2001. In 2001, when we had that tech boom and bubble, there was a lot of excitement for the internet age. There were all these new ideas being thrown out there, but the money flowed into the market way faster than it should have, right? A lot of these were just ideas. We didn't really have the technology to do a lot of what people were thinking could be possible now due to the internet. There was so much money flowing into the market that created this overexuberance in the market, and it just wasn't ready for it. However, technology is greatly reducing the cost of many different technologies. And they talked about in that video that bringing something down like mapping, right, for a genome or mapping, doing a liquid test for cancer. A couple of years ago, it might have been $30,000. And then it got brought down to $10,000. That's great, but it's still way too high for what will actually be profitable, what hospitals will actually be willing to pay for. It brings it down. It cuts the cost into a third, but it's still way too high. So once you hit a certain number, though, once it gets down low enough, it becomes more efficient to do it that way. And that can cause kind of a ripple effect with what we've seen and what they're saying we'll see in the market in a lot of different areas, right? From fintech to crypto to genomics, all these different sectors that they're invested in. There's going to be a level, right? Satellites, where it just makes sense because we can bring down the satellite cost enough that a lot of different companies will want to send satellites up, and it's going to boom. So that's what she's saying here. She's saying, Elon, I appreciate you saying that, but we're going to see a level of innovation that we've never seen. We're going to see real GDP growth that's higher and inflation lower than what's actually reported. She doesn't care about the cost of eggs. She cares about the cost of innovation. That's what she's worried about. That's what she's focused on. That is what makes the market move. So she's saying we're going to see a level of innovation we've never seen before. So I hope you guys like this. This was just kind of an interesting little back and forth, I thought, between some of the great minds of the market right now, between Elon Musk, Cathie Woods, even Warren Buffett in a way. Thank you guys so much. I appreciate it. Thank you for checking out Webull down below and my Patreon if you're interested in seeing exactly what I'm buying and selling in real time. And I will see you guys in the next video. Bye.